Good afternoon, everybody. It's a pleasure to meet you. It's the first time I've come to a Mello event. I'm literally just in from China, so I apologize in my voice or my facial, if I start developing a facial tic in the middle of the talk, so hope you'll bear with me. We're going to be really introducing the company Minds and Machines to the audience today. I don't know how many in the room have followed the company. It would be helpful, perhaps. Okay, so some have. That's very helpful. Obviously, start with the normal disclaimers, the health warnings, so no surprises there. I was asked to step into the company in 2016 by the investors. As you'll see, the company started trading in 2014. And essentially, the founders have done a fantastic job in putting together a portfolio of assets. But let's just say, took their eye off the ball when they had to start operating them. So the company had developed this portfolio, and in no short order, by 2015, we're running the business at effectively at a $16 million loss, at which point the phone call was made. To explain the business, our ticker is MMX, and the business, we operate in this world called top-level domains. Historically, that's what the business is. And to explain to people, a top-level domain is, think of something like .com or a country code such as .uk. Those are top-level domains. And back in 2012, the regulator, there isn't a regulator of the internet, and it's called ICANN, or it's a governing body rather than a regulator. And they wanted to open up the market to choice, to consumer choice, because .com essentially accounted for 50% of all registrations on the World Wide Web. And also they were worried about the notion of a splintering of the internet. And to counter that, created an opportunity to allow any businesses to apply for the names and that they thought could create commercial opportunity. And not only could it be in the English language, these could be in foreign language, any script, essentially. So it was a really essential democratization of the internet. And the founders did an amazing job for seeing the commercial opportunity and putting together a portfolio and effectively securing 32 of these extensions. And I'll give you some of the names afterwards to give some flavor to that. But in the 2 years that Michael and I took over the business, or 2.5 years of business, we've taken a business that had started when we took over, only 250,000 registrations in those 32 properties. Today we have 1.85 million registrations, so that is simply my name, my company name, ending. And so we've seen significant growth in there. And what has been the heart of the business model is when somebody buys a name, they renew it. So essentially what we're looking to develop is an annuity-based business. And that annuity is based on our renewal revenue. So for us as a business and as a sort of a management team, the essential goal has been to grow that renewal revenue base. And again, this year, these are numbers that are in the public market. We expect our renewal revenues to account for $9.5 million of a total revenue, expected revenue over 16 million. That renewal base will be essentially 100% up on a year, and likewise the previous year. So this is the key piece of our business, certainly in the early years, is not so much, ironically, growing the top line revenue, it's growing the quality of the makeup of the revenue mix. And that's really what the journey's been about. As you'll see, 20 employees, a lean team, and offices in the US, Europe, and China. So that's just to give you a little bit of some key numbers to bear in mind as we run through the presentation. So our portfolio, what are these extensions? What are these names that we own? And you'll see we characterize them by, in the blue, sort of very much generic and names, things like .work, .vip, words that have a very broad usage, and so typically would be referred to as generic. We then have a very good portfolio of specialist interest or professional names, such as .law, .fashion, .wedding, and recently in late June, we acquired the ICANN portfolio, which was, and we can talk about that at greater length in the presentation. Then, outside of the generic piece, we have regional and city, so things like .Boston, .Miami, .Bayern, .London, and they are a category. And then the final category are those TLDs where we've acquired the licenses to operate in China. A little bit of the background is that China came onto the internet at a much later stage, historically was heavily regulated, and then under the liberalization of that region, the internet is now, and the desire to get a country online is absolutely part of the China government's development strategy. We were very fortunate to see that market. We were the first to actually acquire a license so that our names can resolve. That means that if somebody puts up a website or sets up an email address with our extensions, they will actually function within China. Historically, many extensions simply can't. And so those that are indicated in red represent those properties that are licensed to operate in China. One of the notable successes in the turnaround story has been an extension called .VIP. In that region, it's synonymous with good service. It's viewed as a Chinese phrase, more so almost than we do. So that's our portfolio. And how we make our money and how we turn this business round that was losing effectively $16 million into one of projected profit of $4 million in that period, there has been some natural steps to that journey. First and foremost, we restructured ourselves purely to be owners of the IP. And these are the top-level domains. Because for a top-level domain to work, first of all, you've got to get the license to own the property. Secondly, you need the technical back-end that fits into the internet system, into the World Wide Web, and doesn't collapse it. And then you need to be able to sell to the end consumer. And the mechanism for that, the retailers of domain names, are called registrars. So think of the likes of GoDaddy, 123reg. So they are retailers. Now, the founders of the business had this very ambitious plan to do all of it. Not only were they going to own the IP, they were going to run the technical back end, and then they were going to retail. And that's really how you turn a great idea and then suddenly you can burn a lot of money. Because to be a technical back end, that means you believe you can be as good as a Nominet or as good as an affiliate. If you're going to be a retailer, that means you believe you can outperform GoDaddy or Alibaba. These are big, big companies with understand retail markets. And clearly our view is, no, let's partner with the best, focus on what we can do well, which is essentially be a B2B business and understand the asset, and then use the benefits of third parties. So as a business, we outsourced our technical backend to the runner of .uk, Nominet, which is globally seen to be a gold standard for quality. And then we embraced this independent sales channel globally. And not only did we say, not only were we no longer going to be competing with the retailers that are out there, established businesses, actually we've worked very hard to innovate in the area of retail by bringing them distribution partners. And this is a very important point. Most of the sellers of names predate social media. So as a general, and why is that a relevant point? Well, what it means is, if I've sold you a domain name and sold you a web hosting and an email package, yes, I know what you've I know that you've bought these services, but I don't really know what your interests are. I don't know what your business is truly about. And if you're going into a world of morphing the web from these broad generic zones of .com and country codes, and then suddenly saying, well, you're interested in golf, so I'm going to sell you a .golf or a .fashion. Well, you need to have that selling. So as a general rule of thumb, traditional retailers, those that grew up selling over the last 20 years, have not necessarily been the quickest to understand how to reach targeted niches. When you go to the other side of the world, where the internet's only been around effectively a very few years, very different vision, much better understanding how to sell to niches, and likewise, therefore able to adopt these new extensions more easily. So for those resellers that don't understand how to necessarily reach somebody who's into fashion or who's about to get married, what we have done is understand which sites on the internet today, which businesses actually do understand those audiences and are already selling to our end customer base. And then it's very, well, it's not easy, but it's possible for us then to forge these marriages where the name is no longer, you're not having to go to a retailer to buy a name, you might be just going to about your natural day on the web, and actually I'm looking for legal information, and before I know it, I'm being served a .law name, and I'm buying off the site of a third party. So we've described this as integrated distribution partners that support the retailers, and that has been very important to us as one of the mechanisms for driving this growth that's allowed us to basically increase 8-fold our registrations over the last 2.5 years. And by embracing the existing retail channel, it's meant that we've established a global sales channel very quickly and at very low cost. And this is just to give you a sense of the number of retailers, registrars we have in each market. So North America, you'll see 58, continental Europe, 57, China, 59. And as a result of that, it means we now have established a very balanced regional global revenue mix, with the US today accounting for 50% of our revenues, Europe 11%, and China 39%. And for us, moving forward as a business, one of our goals was to achieve this balanced mix of revenues. And again, as we talk through the presentation, happy to explain how we've achieved that. And the numbers, just to show the chart of the business, the growth of that business over the last couple of years. By the end of 2016, we had taken the business from 250 to 729. By the half year of this year, we're at 1.5 million, and today we're at over 1,850,000. So that is a very constant growth path, and that's the heart. If we're not getting new registrations into the hopper, we're not going to be able to grow our renewal base. The renewal base there, again, we see the path over the last 2 years from to 2.4 million to 4.8 to 9.5 projected this year. And this year, that has been aided by the ICANN acquisition. We will have seen probably a couple a million from that. It was bought in the half year, so we'll have a half year contribution on renewals to make up that number. The chart on the right is absolutely key for us, and that's the relationship between our renewal revenue and our OPEX. Because our first stated goal, milestone in turning this business around, was to make sure the renewal revenue could meet our fixed overheads. And we broke through that at the end of last year. And then really after that, the second milestone was how do we make sure that we make sure our renewal revenue surpasses all of our overheads, i.e. costs of sale, partner payments, as well as OPEX. And we're very pleased to be able to give guidance on that we see that milestone being achieved within the next 12 to 14 months. So we are in a very good place. We've got very good visibility on our renewals. And that visibility means that we can start providing guidance on dividends and give guidance that we will be moving towards a dividend policy. So those are just the key thoughts on the growth story. When we look on this piece, it's important to understand that when the growth in the second half of the year, we are getting the benefit of the acquisition that we made. And it's that acquisition that has accelerated the rebalancing of our revenues, both regionally and likewise cemented and accelerated our renewal growth. We've established the model, but the acquisition has just simply accelerated that journey. So when we look forward to how do we anticipate growing the business moving forward, we see three main paths that we'll be taking. The first is carry on doing what we're doing. We think we have done something within this young industry that hasn't been achieved, i.e. be profitable. We work in an industry where in new gTLDs there's essentially 4 or 5 portfolio players and 400 or so independents. Very, very few have cracked the nut of how to scale profitably. And we think that places us in a very strong advantage. But we want to do that essentially through our core business. We don't want to be just issuing paper consistently for acquisition. Organic registration and renewal growth is at the heart of what we do. The second piece is portfolio management. As a team, we inherited a portfolio of effectively 28 assets. And there are some that we've managed to see commercial opportunities and develop commercial opportunities around because just by research and using the benefit of some white hairs, it's possible to see that there is this scope to grow certain assets. Other assets, less so. And equally, so there is as much an argument to sell assets that are underperforming because, frankly, if somebody believes they can do a better job on an asset that we have not prioritized or haven't been able to see immediate growth, like a portfolio of shares, there are some that we might let go. Others we might wish to acquire. So portfolio management is key to us. And the last piece is innovation. The World Wide Web its history goes back much longer than most people care to imagine. The internet. The World Wide Web, its time frame is much more clearly defined. It sort of essentially started in 1989. The internet, the technology, where the universities in America were putting themselves together and establishing protocols and exchanging, that predates the birth of the World Wide Web. And the domain naming system, on which all traffic is routed over the World Wide Web, is just past its 30th year birthday. And I was talking to one of the creators of that actual World Wide Web, of the domain naming system, the way in which all traffic is routed, only yesterday. And his words, not mine, there has been no innovation in the DNS for 20 years. So we think there are significant opportunities to innovate. But we only want to do that off of core business where the fundamentals are actually making money, and so we're not taking any risk in any new projects we might look at. So just going into depth onto organic growth and just giving a little bit of the insight of how we are monetizing the business. The graph on the left-hand side was done over 2 years ago. We launched into China, as I indicated earlier. We were the first to be able to get license for our properties to resolve in China. And we launched a property called .vip, which at the time was the most successful new domain ever launched on the World Wide Web at that point. It generated in revenue, in billing, should I say, in the first month, about $5 million. And part of that was by using how we were able to generate such high value to the company was by essentially creating a universe of names within .vip that had higher value. So, for example, in the Chinese market, a single character or a single number or 2 letters or 2 numbers have much higher value than a 7-letter word or a 7-letter character, so a 7-letter word or a 7 number. And so we priced accordingly to allow inventory to potentially be sold at considerably higher values than the normal standard rate that applies for what are termed standard names and their ability to renew. We always knew that we would get a spike of revenue in the early stages, which is great when you're turning a business round and shoring up the balance sheet. Not so good to analysts wanting to model a company where it's about visibility on renewals. And so the graph that we demonstrated to illustrate that point was it was a conscious decision that we would see very high revenues from newly launched projects or relaunch projects in the earlier years. That would tail off over a 5-year period, and we would see the standard name sales and ongoing renewals carry the weight. And that is absolutely the path we're on. We're year 3, and that is exactly the journey that I'll give some further insight on as we talk. But note, it's not about, when you've dramatically grown your revenues very quickly, it's not about the following 2 years about continuing that growth path. It's much more about improving the quality of the revenue mix, so it's standard names with very high renewal rates, and that part of the journey. So that's one part of how we have improved our revenue mix. And the second piece is how we are going around driving new registrations. And essentially, there are 3 models that we're using. And the first point is we have, because we own the IP and because we own the assets, we have huge flexibility on pricing, which is rare, and our actual unit costs are very low. So we have significant levers we can play with. And depending on what lever we use will determine the likely makeup of renewal. And the first is pretty simple. If we offer small discounts in a year 1, we might get a lower volume of sales, but predictably a much higher renewal rate. It's been a more measured decision. And so across the tests we've run over the last 2-3 years, we know if we use minimal discounting, we'll get a low volume of new registrations. The year 2 ratio renewal rate will be around 60%, and then year 3, it shoots way up over 75%. And we have consistently been at the top end of renewal rates within our industry, both within traditional countrycodes.com as well as the new gTLD arena. So we have that model, which is very useful. The second model is, which we have tested only in one region, and we used in a very controlled measure, but where we offer very aggressive discounts within the first year, drives high volume of new registrations. The consequence of that is your renewal rates for year 2 will be lower, but of the ones that renew, you then end up, everything morphs to a 70% plus registration level by year 3. So we are very conscious, and we can work the levers pretty easily and effectively, and with a portfolio, it allows us to do these tests. We're not having to put all the money on black or red with how we develop the revenue mix within our portfolio. And then the third piece is how do we better monetize those high value names, the premium names. And one of the pieces we are working on at the moment is historically premium names within our industry have been sold on this model. The first year is very high. It might be $10,000, could be $25,000, could be $100,000 in certain instances for a name. But then it renews at the standard rate, which may be $20, or in certain instances $50 or $70. So there's a huge discrepancy between the first year. Potentially there can be situations where there's a huge discrepancy. What we're doing now is working with some of the leading brains in the industry to introduce or follow what is called a mid-mid strategy. And what that means is instead of charging $1,000 year one and dropping down to 20 for the sake of argument in year two, we will sell them at $100 a year. The advantage with that model is it suddenly removes any of the exposure to that one-off income. And certainly for us, it is a very interesting model to explore. It is, whilst on an Excel sheet, it makes complete sense. The realities of life is not always that straightforward. Sometimes it can mean retailers having to operate in a different way. Don't always like that. And likewise, whilst in certain regions of the world where consumers benefit, would see that as an absolute benefit, in other regions, less so. So it's not always a given that what works well on an Excel sheet necessarily plays out in the commercial world. But it is something we're looking to do to continue reducing our exposure to the one-off income phenomenon. And the second piece around the growth strategy, the ongoing, is portfolio management. And I spoke earlier about our first acquisition, and this was our ICANN portfolio, which was a series of 4 properties which were licensed by the governing body, ICANN, to create governance and control over adult content on the website. On the web, and we spent a lot of time looking at this and understanding the risks or potential perceptions of acquiring this. And the founder of ICANN is actually in the room at the moment, and I just want to applaud him publicly, because what they achieved with the educational authorities, with the leading educationalists, with the police, is an environment that for the first time created real protection, consumer protection on these sites. Unlike anything on .com or a country code, there is complete ability to monitor and police this part of the web. So rather than pretending it's not there, a series of mechanisms were set up to control that. It's been a very successful model. Our renewal rates are very high, and it helped accelerate the rebalancing of our portfolio. And it gives oversight and governance to a part of the web where, frankly, there is little or none today. And certainly I have young children, and I'm glad that such initiatives of this were given the day of light. And not only has the acquisition been earnings enhancing for us, we bought it, we believe, prudently at an 8.6 times of net profit before tax. What was very encouraging was we were in a competitive situation, and we didn't pay the highest price for it. And more encouragingly, we structured it 33% cash, so $10 million cash, the remainder in paper. And for us, that's important. But historically, there's a perception that US businesses or US entities do not want to take AIM or UK-listed paper. We can absolutely evidence otherwise. And the renewals piece. Last piece is we will likewise look to monetize underperforming assets where it makes sense or where we can find a commercial relationship with a third partner. The last leg of our growth story is innovation, the digital identifier space. We've been talking about the World Wide Web, 300 million domains today. On that, taken 30 years to get there, growing about 3 to 5%. Blockchain is a new protocol, distributed ledger technology, been around about 10 years, but in earnest only has accelerated in the last 3 years. Today, there are estimated 200 million identifiers out there, Ethereum being the #1 blockchain in number of identifiers, 43 million identifiers. And all of those identifiers, just think of them today as very long hashes, 42-character hashes. And we have the Internet of Things, 20 billion devices. Point is, on these two, no naming conventions today exist. No human-readable names essentially exist, and certainly not human-readable names that interact with the World Wide Web. We are in the game of providing names and a mechanism to structure and flow naming protocols on the internet. Today, and if we look at the blockchain universe on its own, essentially they are self-contained universes. Whether you're Ethereum, Bitcoin, EOS, and I've just named currency names there which are popular. The key thing to remember about them, the greatest work in blockchains today is not happening in cryptocurrency. It's all about how to improve supply chain systems within industries. But all of those universes today, all of those blockchains are essentially standalone planets. There are very few common protocols, very little interoperability, and standard identifiers are typically these alphanumeric hashes. Just for reference, that's my wallet. So if I wanted any of you to give me some money, you'd have to copy that down. And please don't get it wrong, because you'll either send it to the wrong place or lose your money. There's no getting it back. That's a problem, we believe. So the vision, we launched .luxe over 2-3 weeks ago now. And it's a very simple vision. My name .luxe, I put it into the World Wide Web, and it will go to my website. I put it into blockchain A, and it will go to whatever it's associated, whatever I've decided to associate in that blockchain. Could be my wallet. Another blockchain might be very good at storage facilities. It's the best blockchain for storage. So essentially, the vision is very simply, my name, .luxe, can work in each of these individual universes without having to create a different naming protocol and different passwords, et cetera, et cetera. The vision's kind of simple, but normally is, well, can any of it work? Well, we're very delighted that when we launched this, we thought we'd better make sure it can work. So at launch today, we have already at 1.1 named 2 protocols. And our first blockchain that we've integrated with is Ethereum, as I said, the largest, fastest growing blockchain today. And very simply, put my name.luxe into the World Wide Web, and it can go to my website, use it in Ethereum, and it will personally route to my own wallet in that instance, but I could associate it to whatever I want to on the Ethereum blockchain. And we will continue to roll that out to other blockchains. We are the absolute first in this area, and I'm pleased to say that the revenues we've generated from .luxe in the first 3 weeks, if we equated that to .vip, where we've had about 800,000 sales, we've sold the equivalent of about 80,000 .vip names. The registrations might only be 2,000 or 3,000, but my point is the value that consumers will pay are considerably higher. So we're very, very encouraged with how this is rolling out. We have Alibaba as our lead partner in China. We have the lead wallet provider, global wallet provider, already supporting us, the lead media group, and we see this strategy growing out of developing distribution partners so that, very simply, if I'm getting a wallet, I'm shown a name, and I might just buy my name. So the investment case. Our investment case is our core business has been transitioned into a stable company able to support a share price based on fundamentals. And what this slide shows that over the as we've turned this business round, we've always had very frothy multiples, 28, 25 times, very high multiples, but really not supported by any renewal revenue. So when we had a 28 times multiple, yes, we were profitable. We turned the business operating EBITDA into profit, but the renewal revenue base was very low, and that one-off income represented 60%. So I would say the value had got way ahead of the reality of the business. A year on, 2017, we've now shrunk down our exposure to one-off income to 50%. 49 under 50%, and we see the renewal revenue going. But still, the multiple, I would argue, disconnected. Where we are today, we will be, it is fair to say, our exposure to, we know, you can see where our renewal revenue line is at. We know our exposure to premium, one-off premium will be beneath 30%. And our multiple now, we would argue, is in the land of the very plausible and very real. Our peers are at 30%. So the core business based on fundamentals. The second piece is we can grow the value of the business through the fundamentals over the next 2 years, and we have visibility on how to achieve that. So the targeted numbers we want to get to are not based on having to reinvent the wheel. It's about doing what we're already doing. More importantly, we have this strategy in place to accelerate value through innovation and selective bolt-on acquisitions. Our final comment is we've also used this year to the final piece of the restructuring has been to clean some of the historic issues that surrounded certain contracts the business entered. The previous management, we've cleaned that from our balance sheet, and we're now obviously interested in widening our investor base. So thank you for listening to the story.